fair value gap, inversion, distribution. See, this move played out because price inversed both bearish FVGs that were present. But a common question I get is, what do you do if only one FVG is inversed? I'm referring to a situation like this. Let's say we have two bearish FVGs, but price only inversed one of them. Now, the way this works is that if there's enough room, sometimes I'll buy this close and de-risk at this upper FVG. But let's say we've already tapped that FVG, I won't take this trade. Let me show you what that looks like in the market. As you can see, we have 1, 2, 3, 4 bearish FVGs present. But on this lowermost inversion, we had already tapped this upper gap, so there is no valid entry. And then on the second inversion, we already tapped this third gap, so no valid entry. And finally, when price closed above this third gap, we had already tapped that fourth gap, so no valid entry whatsoever. This is a situation in which I do not want to put risk on because we don't know how price is going to react to that upper FVG. However, in a situation like this, in which we have two bullish FVGs, as you can see, we've closed below one gap, but we have not tapped this lower gap. So I would still look for a valid short entry because there's about 20 points of profit that can be had between this upper FVG to this lower gap. So I'd be looking for a retracement to sell short, placing my stop at this displacement candle high, and looking for an exit somewhere within this lower FVG. So if the next candle opens up and taps this upper inversion before tapping this lower gap, I will get filled. That occurs here, and as you can see, we would have got our retracement entry and we would have had our profit. Let me show you a live example of exactly how to play this trade. As you can see, market has sold off, we've left buy side liquidity at this swing high, and we formed a bearish 1 minute FVG. So I'm going to mark out this bearish gap. I'm also going to mark out this small upper bearish FVG we have. The close I'm looking for is an inversion of this lower gap. I'm going to go break even at this upper gap, and then I'm going to fully take profit at our swing high. As you can see, price stabs into that bearish FVG and finally closes above on this candle here. Now, because we have not tapped this upper gap, I'm still going to take this entry. Let's see how the trade plays out. Keep in mind, I'm going break even at this upper FVG because I don't know if price is going to have an adverse reaction. Okay, so we've tapped and we have closed above that gap, but I'm still going to move my stop to break even. And I'm all out here in just about 4 minutes. Again, this is how I like to play the market when we have multiple bearish FVGs or bullish FVGs, and I'm looking for inversion reversal trades. I'm either buying the closure of that first inversion and then targeting that upper gap as my exit, or I'm waiting for price to completely close above both. However, to reiterate, what I'm not doing is buying a close like this, where we've only closed above one and we've tapped and not closed above that upper gap. If you guys want to learn my IFVG strategy at its core, just comment APJ and I'm going to send you a 12-page PDF in your DM for absolutely free.